Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Happy Hump Day, all. If you hear loud sounds in the background, it's a rare, what do they call it? An atmospheric river coming through here in Southern California. Yeah, I know. My hair is all messed up today. It's just, this is what my my disheveled work face looks like. I'm pulling my hair out over a bunch of different projects and these markets. So let's start things off. It is the 15th of November, halfway through this month. We've got 45 days left, so let's embrace it. The topic for today, more great data. Yes, I know. As Skilled Stockman says, data. When will it stop? Yeah, it is kind of a broken record, at least for the past 2 days for us. I was looking for other really exciting things, but honestly, today is all about the data. And if you look at what happened yesterday with the CPI numbers, markets absolutely rejoicing. I would argue that the data today is far better than yesterday's data with CPI. So the consumer price index numbers, yesterday were great. Zero, meaning we didn't see any inflation overall. We actually saw deflation month over month on the PPI data. And to me, that's a bigger story going forward because the producers are seeing such a dramatic decline in costs and that might pass on further down the road, which would, extend the bullish story of more upside market movement because rate hikes will probably cease, and lo and behold, we get that same story rolling on. So let's talk about more great data. I'll run through the initial data points that came out today just so we can see those. Here is your economic calendar we saw for today. Now, the PPI number is the one that I really want to focus on to start. That's the big daddy. They expected it to come out at 0.1%. Now, we were at 0.4%, and they expected it to drop to 0.1. That would be fine and dandy if it dropped that much. In this case, we came out at negative 0.5. That's the lowest reading that we've seen on PPI since mid-2020. So we're going back a long time to see such a big clawback in PPI data. Now, of course, we looked at a lot of those charts yesterday, and we looked at a lot of the commodity prices, particularly oil being a major factor to that. But this is, for anybody who's got that bullish case out there, I know Big Eb is probably here with us today, and he is definitely thinking that we're going to get an end-of-the-year rally. And this would certainly bolster that story and give you the belief that we're going to see a really strong close to the year, particularly if the next month's reading of PPI is any lower than this, then you could see a rocket ship going into the end of the year and maybe even breaking all-time highs. So it's definitely been a pretty big about face. You notice if you look at this chart that I'm showing you right now, at this point right here, it didn't look good. We had 3 consecutive months of PPI numbers that were higher than the zero line. Obviously, we want zeros because that means nothing really growing on the inflation front. And then all of a sudden, we get these big drawdowns. Right, there's the most recent data. It looked like it was actually starting to surge to the upside again. It's like, here comes inflation, and thank you, crude oil, ripping this thing the other way. I mean, that's a dramatic shift in what we saw with PPI. So I think that this is way better news than what we saw yesterday with CPI. I'd take the PPI dropping this fast as a very bullish sign for our markets overall because costs look like they're falling very quickly. Now, I will say, as I did yesterday, and if my friend Gabe is watching, he's like, you're always so cynical about the data. Yeah, I just don't trust it. I don't believe that the data is actually true and honest. However, you are seeing the impacts of that crude oil price chart that's falling like a rock, impacting producers, right? Transportation costs are declining, and you're also seeing other goods and services decline. So, yeah, great. I think it's extremely bullish for right now, but it's also 1 point data. This is 1 month. And again, my point that I was trying to make yesterday is if you look at this chart of crude oil, it's been on a 2-month absolute meltdown. Does it mean that it's going to continue? Does it mean that it's over for crude oil and all of a sudden it's going to go down to $50 a barrel? I don't think so. But, that's just my opinion on it. If you look at the long-term chart here, do we get crude oil down to maybe $67, the low that we saw back in May of this year? Yeah, possibly. From current levels, what would that be? Let me just map out some numbers here. We're talking roughly 14% slide. Well, look, if we saw another 14% slide in the crude oil price chart, you're going to see these equity markets most likely rip back up and break through those all-time highs. It just seems logical that would be the case to happen. Yeah, President Z is in town. All is good. Yeah. By the way, on that note, thank you for. This is why I have an issue with the show sometimes. I have this whole. I'm going to go through these pieces of information, and squirrel, I'm on to something else. I have a friend who lives in San Francisco, and every day, well, it seems like he's slowed down a little bit because I think people are just distraught about it, but he posts a video of life in San Francisco, what it's like in the Tenderloin and where he goes to work, and I mean, unbelievable. I wouldn't want to walk down that street. It's gross. It's disgusting. And it's just horrible to watch people in the condition that they are in. All of a sudden, that whole thing, cleaned up. City looks nice and beautiful now. All the homeless are out of the way. No more peeing and pooping on the streets as they do in San Francisco. It's remarkable how when you have trying to create a good impression, you can clean up your city. But when it's day-to-day people living there, they don't care. Just do what you want to do. Lawlessness. So yeah, President Z is in town. We'll see if I pronounce it wrong, but we'll see what comes of that. Who knows? I think we would do well to repair hostility and relationships with China and just try to be more peaceful around the world. Let's see how that actually ends up going out. Anyway, let's go back to our charts here. Looking at that PPI data and CPI numbers, those pieces tell me that this will probably going to continue until that data changes. So keep your eye. I think the major driver right now is going to be crude oil. If we continue to see oil drop again down 2.19% today, here's your crude oil chart. If that continues to drop, then you'll probably see these markets continue to rally as the impact of crude oil declining will have a significant impact on the inflation data. So there to go. Yeah, right. Let them move to San Francisco. Yeah, Z, come move to San Francisco. Keep it safe. All right, your second piece of data. That was your producer price index, which of course is, they go hand in hand, usually back-to-back days. It'll go CPI, then PPI. Two other pieces here. Let's look at that Empire State Manufacturing Index. Now, for those who don't follow this one, typically when it's down below this zero line right here, that's a sign of contraction and really pessimism, that in that geographical area of the country, they're not feeling optimistic. And the further it gets below zero, obviously, the more pessimistic. And you can see in 2022 and 2023, the preponderance of data has been below zero, meaning they're feeling very negative and doesn't look good. Well, we've started to see those lows get a little bit higher, and it looks like it's trickling up, and all of a sudden we popped aggressively to the upside. It's only 9.1, but still it's a great sign to have back above zero, and it feels as if the optimism, not just with the CPI and PPI data, but the economy overall is starting to feel a little bit more optimistic. And that would lead us to believe that this Empire State Manufacturing Index number is going to continue to move on up. And who knows, maybe we get to those 25 levels that we haven't seen since 2021. So that's another good piece of data. And lastly, if you look at the final piece, which is one that I mentioned in Monday Morning Must-Knows as being pretty critical, that is retail sales. So as you can see on the screen here, retail sales were 0.9% for the previous month. They expected October's numbers to be negative 0.3%. It came out at negative 0.1%, so slightly better than expected, although still a contraction. Now, is this that big of a deal? Well, let's go past the whole COVID whipsaw and see what the data looks like. Since we have a contraction number of negative 0.1 this month, right? It's been 6 months since we've been below zero, meaning optimism, people buying, purchasing going on. So it's negative in a sense that it's below zero and it shows a contraction, but the contraction isn't as significant as analysts have expected, which obviously is a good sign. Now, this is a bit of a conflicting piece of data because all the other data looks really optimistic. You had Empire State Manufacturing Index looking great. You had CPI levels showing you that there was no inflation over the previous month. You had PPI numbers that show we actually have a contraction of 0.1% over the previous month. So good information. And then retail sales, better than expected, but still negative. So that's the only real negative piece I see with regards to data this week. But that leads us into what's been going on this week. And if you've been looking at that earnings calendar, let me run through some of them for you right now. Here's what happened today. We just had Cisco report earnings after hours, and boy, that is not a good one. Let me just bring up that chart here. CSCO. Here's Cisco down 11% in the after-hours session. Let's just look at the big picture. Cisco actually doesn't look that bad from a long-term perspective. Going back to mid-October of 2022, been a nice little uptrend. Certainly showed some weakness over the past month and a half. But let's look at that 5-minute chart. And look at that candle. Goodness gracious. Not only is it down 11% right now, but in one candle, it went from $53.33 to a low price of $44.70. It dropped 16% in literally just like 2 minutes, right? Pretty crazy drop there for Cisco. Now, the good news for the markets is Cisco is not a major component of the NASDAQ, the S&P, or the Dow, right? It's not the key one. Is it in them? Yes, but it's not a heavily weighted one. It's actually near the bottom for some of these indexes. So not that big of a deal, but I'll put a little line on the chart here so we can see where it's at as we speak. There it is right there. All right, 47.40 is where it's at right now. And the only reason I put those lines like that is so when I go back to the daily time frame, I can see where that lines up and see if it is actually in an area of demand. In this case, I would say not really at any area of significance, in my opinion. So Cisco getting crushed in the after-hour session, but that's not the retail sales stuff. Retail sales are the ones that I'm really interested in. And notice Target today. Great earnings, up 17%. Who was in here complaining that, Merlin, you're crazy to think Target's going to rebound. You're crazy to think that Target's going to move back to the upside. People have memory. They're not going to go back to that store that had gender-neutral clothing. Well, look pretty dang good today. Here's your chart for Target, TGT. Right? I mean, it was consolidating, going sideways. Today's earnings, I didn't see the numbers myself. Let's see, they had estimates of $1.47 per share. They came out at $2.10 per share. That's a pretty monumental beat for a company that's been in the spotlight of negativity for a long time. So, unfortunately, I did not sell any more calls or puts against the against Target here. I wish I had, because it would be a pretty damn good trade at this point. Now, I'd like to see exactly why these numbers were so good. What was it in their earnings announcement that caused this? Was it same-store sales? Was it just increased spending? You know, what was the catalyst for that? Because there are other companies that are reporting earnings as well. You saw TJ Maxx, one of my personal favorite stores to go into when I'm, I tell you what, if you're depressed, just go to TJ Maxx. It doesn't matter what you're into. You can buy everything in that store. All kinds of good stuff. Furniture and home goods. Love it. So they actually beat earnings as well. They were down 3%. I'm trying to look at more retail companies here just to give an idea. JD.com beat earnings. They were up 7%. If you look at yesterday's earnings calendar, we had some retailers in there as well. Smaller names, but still there. Home Depot, as we mentioned on yesterday's show, they beat earnings. You had, let me get the big names in here, the bigger names. Not Nucor. I think that's it for yesterday. And tomorrow, as far as retailers go, you've got the other giant. You've got Walmart reporting earnings. You've got Ross Stores and several other retail companies reporting earnings. So you can, of course. It's funny. A friend of mine just posted this thing from high school. There was a pair of jeans called Z Cavici or Z Cavarici or something like that, and they were like women's pants that men wore. Well, that was back in the 90s. That was just fashionable. Yes, Robert Ross is reporting earnings. They are reporting, as you can see here, tomorrow after market close. Right now they're expected $1.21, but in looking at most of the numbers for the retailers that are reported, they're actually looking pretty good. So it makes me feel a little more optimistic going forward on market behavior because it means more spending, and if those retailers are posting better numbers, that puts there's something I call the downward spiral. I think I mentioned that before. The downward spiral is economy slows down, businesses start to slow down because people aren't buying as much, right? Money gets tight, people don't spend as much. If people don't spend as much, then the businesses don't earn as much money, then they have to go and start making layoffs. Those people get laid off, they spend less, and it becomes this cycle that just gets worse and worse and worse. With the data that it looks like it's coming in, it's actually going to be this upward spiral, right? Which is if retail sales numbers are coming out so rosy, and that may encourage some of these stores to go buy or bring on extra employees to bring in more people to earn money that they'll spend in the economy. So I hate to say it right now, it's looking very good. I still have this bearish halo over me, which is why I'm being very cautious with my trades right now. But yeah, the data looks really good. Data looks like these markets want to keep on moving up. I'm definitely skeptical on it, but markets are doing what they're going to do, and it's not my job to second guess it. I told you I opened a short position yesterday right at the close. That's going to expire on Friday. It's a small trade. I do think you're going to see a little bit of a pullback. As you did notice on some of these indexes, like the S&P, and I'll show you right now, we finished today with the shooting star formation, which is one of my favorite patterns. Now, if I look at the volume on this bad boy, volume doesn't mean that it's capitulated. We haven't had that oh my goodness moment where it just surged in volume. So that's one little piece against my argument for a pullback here. But you did have a shooting star today on that S&P. You can see here on that NASDAQ, you have one as well. You could look at the Russell, also with a nice big shooting star formation. Heck, why not just sprinkle the Dow on there, which was not a shooting star formation, but ripping to the upside going forward. So all in all, I'm I'm feeling like there's going to be a little bit of a pullback here just because of the overall market prices, but the data from Target and Walmart start to look much, much better, and that could be the piece that kind of lifts these markets higher. Now remember, more spending leads to more inflation. If we get more people working, more money coming into the economy, more spending, that could lead to inflation. But as of this moment, the data is looking, 2 thumbs up if I'm Siskel and Ebert. And the only dark horse, at least that I see for right now, is crude oil. Crude oil has been the catalyst for the whole inflation discussion, in my opinion. When I look at some of these other commodities, I don't see them falling that much in the month of October. If crude oil continues its downward trajectory, we will have another meeting in December, and the Fed will probably stay right where they're at. If inflation falls so much, there may be, I would say a slim chance that they actually cut, but that will probably be next year. You know darn well that the Federal Reserve, the chairman, would love to cut rates by the end of the year. Why? Because that would cause the markets to soar. Everyone would feel warm and fuzzy and happy about America and spending and life in general, and they'd all go, Jerome Powell, you're my man. If you can't do it, no one can. So I don't think it'll happen, but there's always that slim chance that there is a rate cut here sooner than expected. Now, let's look at the money that's betting on that to see what the numbers say. I didn't look at it today. Of course, we had the PPI data come out, which I think was far better than the CPI yesterday. Here is the probability of December 13th. There is a 100% chance, as of this moment, and this is hey, Big Eb, you missed it. I was talking about you. We had your ears ringing. If you right now look at this, there's a 100% chance that rates are going to stay exactly where they are. Now, of course, this could always change. Any little piece of data or geopolitical event can change this one. For me, I do think it's going to stay the same. I don't think they're going to raise it. The data is just looking too good. And, to my argument I made just a minute ago, which is if the data keeps coming out better than expected, let's say retail sales continue their uptrend and getting more and more positive. Let's say CPI and PPI continue to decline sharply as they have been. You get GDP numbers starting to show, more growth. These are all great factors for the economy, which would lead one to believe that the Fed would actually start to lower rates. Slow your roll. I don't think this is going to be a knee-jerk reaction where 1 or 2 months worth of data is going to cause the Fed and Jerome Powell to start cutting rates. At the bare minimum, they're going to keep things right where they're at for a few months to see more data points, right? Obviously, the CPI and PPI numbers that we got this week are like, oh, yes! But that could change in a heartbeat, particularly with the way that crude oil has been moving. All right, let's see. Hey, Chio, good to see you. What would a cut do? So what a cut would do is obviously a cut's going to drop that short end of the yield curve, right? Which is going to bring in a whole new flood of capital away from the bond market because now the short term is going to give you as big of a yield. They'll look for alternative ways to get bigger yield. Typically, that means cheaper money as well. So as that yield curve starts to drop, it's going to encourage investment, meaning spending by businesses, right? The lower yields get, the more likely businesses are going to take on loans, borrow money at a cheaper rate so they can grow their businesses. So a rate cut would cause an instant pop in the markets. You would see a pretty nice sized jump right away. And I kind of feel like yesterday's move in CPI is what it would look like. I mean, if you look at what happened to the Russell yesterday, let's bring up that chart of the Russell. You asked specifically what would it look like? I think it would look like yesterday's candle in the Russell, where you get a 5% day for the S&P, 6% for the something like that. I think it'll be a big surge to the upside. At this point, the forecasts are that it's going to take out till May till we start to see some rate cuts. Again, if we get 4 months worth of data, 4 months, let's say it's we've got October numbers, we get November, December, January numbers all show inflation subsiding. We're now seeing contraction with regards to inflation. We see deflationary prices. Then that's going to not force, but encourage that Fed to cut much, much sooner. And I think that's going to be the focus going forward here. Does this data plus November's data, which will be released in December, if we see good data in December for November's action, then you're going to have a monster rally at the end of the year. And there we go. There's your data. Let's see. Let me go back in here. I got a whole bunch of comments, so thank you guys for the comments. Let me go back. So bring him more often. Who we talking? Oh, Z, yeah. Let's see. Skill Talkman said, gold on the weekly chart. If we test that October 6th hammer, do you think that it's a good place to buy? I do. What are your thoughts? So let's go look at gold on the weekly time frame here. Go to the GC. And, I was doing a totally different analysis on this one. Let me get rid of those. And we'll go to a weekly time frame for you on that bad boy. So it's kind of tricky to call this a hammer formation. I know what you're saying. You're like, I think you're saying at this point right here at 1864. I believe that's what you're talking about. That October 6th. Yeah. Is this really a hammer? Would be my first contention. It's a hammer. Typically is going to close in like the upper third of the range. This is kind of closing in the middle of it. So I wouldn't really call this a true hammer formation. Does it signify a reversal? Yeah. In hindsight, sure, it looks like a reversal. So could you use that as a buy point, right? Maybe you start to map out your demand zone at that level. Yeah, I think that's fine. Personally, I would probably break this into a daily time frame like this, and I would see what made up. Yeah, see, that totally changes everything now. So mine would actually be the origin of that gap, which is 1845 as opposed to 1860. I'm being a little greedier, right? Trying to buy deeper in there. But that's where I would be looking at it. And I know some people might go even lower and look to buy, the 1838 mark, somewhere in there. But I like the origin of this gap right here at 1845. So, yeah, I think if it comes back down to that level, that'd be a decent place to buy gold, particularly skilled stocksmen, particularly if you are looking longer term, right? The chart of gold for right now, that's a logical turning point. Anything below 18, call it 1815, that's your cut it loose point. So I'm trying to minimize my risk by buying as deep into that zone as possible. Therefore, if it does continue down, I know when I need to get out. But for gold, I'm going to be holding gold. I'm not too concerned about it. I'm in gold and silver for the long haul. All right, what other questions do I have here? Pepe says, in my opinion, this is hypocrisy. Both countries are fighting to be number one power, and both are doing what it takes to be the number one. I agree, but, is there... I almost feel like and this is not a socialist comment, but it's not necessarily that someone has to be number one. We can all be great performers, right? We can all be the best at what we do. We can find our strengths and build on those as whichever country we're talking about, whether we're talking China, Venezuela, US, doesn't matter. Everybody should have the opportunity to be the best that they can be. Where the problem I see happens is when hostility arises because one country will say, well, you can't be the best of this because I'm going to be the best of this, and now we're going to attack you for it. Right? That's where I have issues with geopolitics and just the way that our cultures and societies function. There's plenty of room at the top for everyone to do well. Let's see. More questions. I think we are dropping to 240, 60 demand, and then back long. Yeah, I think we're going to have a pullback. I do think we'll have a little bit of a pullback, but to me, it's been way overdone, and we'll talk about some of the reasons why. Merlin, were you just trying out for a cheerleading? No, never a cheerleader. I will not be a cheerleader. No, not going to do it. Sure, let me go over how I trade shooting stars in just a second. Do you know what is happening with the Bitcoin ETF? Still no news definitively. I feel like the actions today, I don't know if you guys saw what went on with Bitcoin. This was wonderful for my portfolio. Today was a hallelujah day. Love today. It's the highest close we've had on Bitcoin in a long time. It was up 6.94% on the futures. I still am a firm believer that we're going to get a spot Bitcoin ETF approved by the end of the year. And maybe, how we talk about businesses having window dressing, right? Which is let's dump our bad stocks and hold the good ones at the year end. That way we can go, see, we were holding the good ones, but we weren't holding the bad ones. I feel almost like the SEC needs to do window dressing for their reputation. If we end the year and a spot Bitcoin ETF is approved right near the tail end, it's almost like this dark cloud of negativity over the SEC will be alleviated. And they can go into the new year without this cloud of anger and hatred. I mean, you're seeing these letters being written by senators saying, hey, Gensler, I want your job. You're not doing your job. Do your job. Just nonstop about this Bitcoin ETF. It's not that big of a deal, dude. Just approve the Bitcoin ETF and this whole nightmare goes away. Regulatory scrutiny goes away from the SEC, at least with regards to Bitcoin. To me, this is political window dressing. Gensler, do yourself a favor, buddy. Just approve prove all of them. Make sure that they custody their Bitcoin the right way. Make sure that everything else is in line with what you want for a spot Bitcoin ETF or spot ETF, and just pull the trigger. Let them all have it. Let them gangbusters go. And then this whole nightmare goes away for the SEC, and now they can move forward. So that's how I would do it. But again, I'm not the one calling the shot. Tom says, I was a Target bear. They have lost customers. Walmart is stepping up their game. Target revenues are down year over year, and they can always do accounting to make quarters. Sure, that's very true. What was it, the old joke that the new CFO comes in and talks to the CEO, and CEO throws him a whole table full of numbers and says, what do you make of these numbers? Or what does it tell you? And the CFO applicant says, well, what do you want me to tell it to tell you? I can make it tell you anything you want. That's finance. You're right. They can definitely manipulate it. It's definitely a good sign to see such blowout numbers. To Tom's point, does it mean that everything is behind target? Absolutely not. Markets have memory. People have memory. But, I kind of look at this the same way I did with Bud Light, or not Bud Light, the Bud Light issue. If you look at what's going on with Anheuser-Busch, well, that was, when was that? Was that just back here? Yeah, it was back here. We achieved some new lows here recently, but all of a sudden, you've had this really big shoot up. And again, I kick at myself for not having sold some more puts or even buying Budweiser. In the article I wrote, I said, I'm bullish long term. There still are people that are up in arms about what Bud Light did. But slowly but surely, people are forgetting, like, I want a beer. Yeah, give me a Bud Light. It just starts to drop out of your memory. And, Tom, you made some really good points in the letter that you sent me, or the email that you sent me, which were, you certainly have some people that will never forget, and they will absolutely blacklist. My friend Raphael, he won't set foot in Target until the day he dies. And if you buy him a gift from Target, he'll probably return it because he's so upset about it. Same thing with Bud Light. He will never touch a Anheuser-Busch product as long as he lives. And he's the kind of guy, he'll go through and he'll look at all the products that Anheuser-Busch has and go, I'm not touching that at all, never. Oh, there's other people like Kid Rock who were outraged about it, about the Bud Light thing. And, going on record saying, don't drink Bud Light, stupid, I'm boycotting it. And then, a couple months later, he's out there cracking Bud Light like he used to, like it's no big deal. So I think if you look at the population, you're going to get a lot of people like myself who are like, this doesn't really impact me. I got bigger things in life to worry about. I'll still go to Target. I'll still go to Walmart. I don't really drink Bud Light, not really my beer. I think that there's a majority of people like that. And then you get another portion that are going to be the ones who are extremely radical about it, and then some in the middle. And I think the ones in the middle are going to kind of start to lose the memory of it and go back to Target because they just got to buy those deals, got to get those Target deals. But you're right. We don't know that this is the about face and turnaround for Target, but it's interesting to see that nice pop on earnings. That was pretty good. It's a sign that the numbers are getting better than expected. All right, let's see. What else do I have here? I'm just scrolling through questions now. Did you see the Fed watch? It shows 100% no hikes. Yep, I did. Dave, that makes sense. Per my comments just a minute ago, it makes sense. The right thing for the Fed to do is do nothing. Remember, Powell has said at the previous two press conferences, we have not felt the full impact of our rate increases. So you can tell from that statement that Jerome Powell is a little concerned that by raising so aggressively so quick, we still haven't felt the full brunt of those actions. And those could take a year to come through the pipeline. So I think he's smart to have said that to show, that there still is a little bit of pessimism here and you got to be cautious. But right now, the best thing to do is keep it exactly where it's at. If we're seeing data turn around the way that it is, inflation numbers dropping, GDP numbers looking good, you had retail sales numbers, a little iffy, but most of the data is looking good and going up and getting better, then keep right where we're at and see what the impacts are. If there's any sort of tail residuals, we don't see a trend going on in the inflation decline, then they can, raise or lower accordingly. But best thing to do right now is to hold its ranks right where it's at. Is spot Bitcoin at a weekly supply zone? I'll tell you what, it's at a very interesting. Let me go to the spot. I won't use the futures price because the futures annoy me. But we'll go to spot Bitcoin here. Here's the B to the T to the C. Man, get us above 38,000. It would be great. So we'll go to the weekly time frame here. Long-term picture. Now, if you look at this weekly, you can go back to this fall that happened in April of 2022. Personally, I don't see anything here that I would say is a strong supply zone. I could break this apart into a daily and maybe find something over here. But right now, the only real strong weekly zone I see is right around 46,500. I'd be happy if we got there. That'd be great. Again, I thought we were going to get 45,000 by August. I was wrong on that one, but I might be right by the end of the year here. So no, I don't really see it as a weekly supply zone. What I'll do is I will zoom into that area because the weekly doesn't show anything really strong. But let's go to where we right in here. So that picture changes a little bit, right? On the daily or on the weekly, it doesn't paint that picture. What it does, though, for me right here is the picture does look like it. And what I mean by that is if you look at, we had this sideways consolidation and then an aggressive sellout out of it. So yes, I actually do think that there is a supply zone at that level, but for me, it's based off the daily at 37,730, which we just hit today. So let me modify my chart here and drag this supply zone over, which is it's a big supply zone, that's for sure. It goes all the way up to 40,000, just above 40,000. But yes, there you go. Drawn on the chart, we'll keep it there for posterity. Michael says, is the fact that the Russell or IWM near monthly lows and all other indexes near highs a divergence that is significant with longer-term weakness in store for the markets? I believe so. In college, when I was studying finance, none of my professors knew really anything about the markets. It's just mind-boggling to me how unknowledgeable they were about the actual workings of markets. And we didn't talk about S&P, NASDAQ, Russell, Dow. It was like just the market. And you're like, well, what is the market? Oh, it's everything. No, you got to pick a market. As I got out, I was around some really great traders, some guys that really just, in 6 months, gave me more than my 4-year college education and finance gave me. Remarkable about what I learned from those guys. And if you dig deep into it, Russell 2000 is generally a leading indicator for the market. So if the Russell 2000 is showing real strength and percentage-wise it's beating, the S&P, the NASDAQ, and the Dow, that's most likely optimism, meaning that the other indexes are going to catch up. And you're like, well, Merlin, why? Remember the small cap index, which is the Russell 2000, represents small cap companies. And in times of robust growth, of economic prosperity, the big companies gobble up the little fish. Right? So let's say I'm Microsoft and I look over and I see a new fledgling AI company that's doing really well. It's a small cap. Right? It's only worth $500 million right now. And I go to my team and say, hey, we need to get into AI. We should acquire this guy right here. He's doing great. And I'll go out there because I'm flush with cash in these booming markets. I will now go and acquire those small cap companies. And remember, when a company gets bought, typically the one that's being purchased soars in value. So that's one of the reasons why during good times, small caps are great. Now, let's flip it around the other way. When times are tough and money is hard to come by, companies might not be going out there and making purchases. And of course, right now with interest rates real high, that may have a small impact on their ability to make these purchases. But, if we don't see as many acquisitions of small cap companies and maybe not the economic environment for small cap companies to thrive, then those indexes will tend to underperform. And if we look at the weekly time frame here, now let's go to the weekly, and we'll just look at the broader market indexes here just to give you an idea. Here is the S&P, right? S&P broke that trend line. I can get rid of that. Let me get rid of all my lines here. I'm kind of getting frustrated with all the lines. We'll just remove all 15 drawings. So we'll go back to a naked chart for the year. I would argue on the weekly, it still looks good. Right? It's still making higher highs. It's still making higher lows. It just made this lower high back in July of 2023. That's the only part I don't like about this picture. It looks like we're going to challenge that and probably head towards those highs. So strength for the S&P. Look at the NASDAQ. Same picture here. I can get rid of this trend line because that's now broken. I'm going to get rid of all my trend lines. There we go. Back to a naked chart. This is looking like what I think the S&P might look like in a couple weeks. Coming right back up to that July high, then going to challenge all-time highs. So that's your S&P and NASDAQ. Let's look at the Dow real quick. Here is the YM, right? It doesn't look as good, although it's still making higher lows. Still looks decent. And then you have the Russell. Notice the picture of the Russell dramatically different. It's come back down to the bottom end of that range. While it has been rallying for the past couple of weeks, that's fine. You call it the last month. It's looked great. It's still a long way off from its all-time highs and showing weakness. So to your point, Michael, it's a good analysis. I do think that this is a canary in the coal mine, which again is keeping me in that slightly bearish camp here, just because the Russell, if it's really a robust market right now, the Russell should be surging, and it's not, which is why I was short on it. We look at the behavior of the S&P compared to the Russell. This one definitely looks like it's much, much weaker. Anyway, there you go. Let me go. What do we got here? It's General Neutral cheerleading outfit on sale. Maybe next year I'll be a cheerleader for you just to torture you guys. Hey, Chris, how you doing? Good to see you, my friend. What do you make this? What are you talking about? Which Bitcoin futures for day trading? The only one. There's only really one Bitcoin futures for day trading, and that's going to be this one right here. Right? This is going to be from the CME. This is the futures contract. So there were other ones, but nothing really that. There were two. ICE actually came out with the first Bitcoin ETF in 2000. Oh, when was that? I forget when they started. Actually, I can look out here and show you. Was it 2017? Yeah, it was November of 2017 or December. The ICE spot or the ICE Bitcoin future came out 2 days before the CME one, but that one's kind of faded away. Now this is the predominant one that has the volume, and this is what most people are trading, is the CME Bitcoin future. There you go. What else do I got? There is so much good beer out there. Why bother with light beer? Well, I'll tell you, Sly Dog, I studied beer brewing for a while. When I lived in Northern California, I studied under a guy named Byron Bursch, who was a gold medal winner. Great teacher, and of course I drank a lot of beer, and I brewed a lot of beer with my friends up there. And I was a beer snob. I definitely into darker IPAs and stouts and porters and love that type of stuff. But now, man, I tell you, my hangovers from really hoppy beers are just intense. So I actually love Modelo. I love like a light, crisp Mexican lager. Give me a little lime on that bad boy. Man, delicious. So we change with age, I guess. Let's see, what else we got? Should interest rates start dropping? Yes. So and this is a big if, all right? Don't say Merlin said this is going to happen. If we continue the direction that things are going, which is inflation dropping, GDP increasing, unemployment is rising, but not at anything that's an alarming rate. If those trends continue, then it's going to lead to the Fed lowering the short end of the yield curve, which will most likely start to drop that yield curve altogether. So that would lead to rates declining, yes. What else we have? This market manipulation works, raising rates, extending balance sheets, and then destroying them, and the softest landing happens. What does this say about the success of Bitcoin and others? Well, Bitcoin is not determined by the economy. It's a totally different animal. What you and I experience in our day-to-day lives is different than the intended purpose of Bitcoin. I know it sounds weird, but the intended purpose of Bitcoin is to create your own bank, to be your own bank. Well, you and I, we don't necessarily see the need for that. I do personally because I don't trust my bank. I don't trust the government. I don't trust that they're not going to seize my stuff on an instant. So I believe that I need to self-custody and be my own bank. Most of you probably don't, and that's okay because you're so used to having a banking system that you can rely on. It's FDIC protected, it's convenient, I've got checks and credit cards and all that stuff. Everything's great, it's established. I watched a video today about a city in Peru where it's impoverished. It's extremely poor. The kids aren't going to school, right? There's no education down there. It's just poor, and if you don't educate, you're never going to get out of this poverty cycle. So there are these companies, there's actually, I forget the name of it, it's called Nala or something. What they're doing is they are actually using Bitcoin as incentive for education. So what they do is they pay the school in Bitcoin for each student that they teach. So the student comes in, and this encourages the parent because now the school will give the parent Bitcoin for bringing their, bringing their student to the school. So you, as a parent, I'm now incentivized to bring my child to school to learn. And the teachers are now paid with Bitcoin. That's all put in from this entity, right? Think of it like a charitable organization. But now what's happened is the city down there is allowing you to spend this Bitcoin at all the stores and all the businesses. So what you get is a closed loop system. So here's a country that doesn't have a banking infrastructure. There's no financial services industry down there, whatever. So it's kind of a cash-based business, which brings up a lot of crime. So this documentary was showing how people are using their phones and paying for groceries using Bitcoin. And then the grocery stores buying their goods with Bitcoin, right? So it's this kind of a closed loop system of Bitcoin. That may not seem like an important thing to you and I, but when you talk about the millions and hundreds of millions of people around the world that are unbanked and have no access to a banking system and are subject to just an odd life that you and I can't even imagine, that's where it really starts to grassroots grow. And if we see adoption on that level, again, that's not the billionaires holding crypto. That's economies holding in crypto. And as it starts to grow, Bitcoin starts to become more adopted. Then you see it become more accepted. The adoption part is what I'm hanging my hat on, which is you're going to see more adoption. You're going to see more growth. And it's an actual real physical currency, right? Compared to the US dollar, which can be manipulated any which way but Sunday. It can actually be even manipulated on Sunday. So that's the main reason, Dave, I see the impacts for Bitcoin. All right. Let me see. What do we got here? I know you don't like penny stocks. What do you think of BTCS? I've looked at this one before. Yeah, I mean, if I was in a hospital, this is like flatline. It's dead. I don't know what this symbol sounds really familiar. I can't remember what they do, but let's just look back at the chart here. All right, I'm gonna go back to the glory. Let's do this on this is a weekly time frame. So you go back into here 2012 when this thing started. It's already done a ton of reverse splits. This chart looks atrociously bad, and ever since 2016, this thing has been nothing but dead. This has done reverse split after reverse split after reverse split. I don't like it. I would just stay away from it. It's like the perfect downtrend into oblivion. Yeah, no, I don't see anything here that would cause me to buy, other than the hope that it's going to have a big bounce, right? That you're going to see some, huge pop in this thing. It's $1. I'd rather spend my money where I feel I have a higher probability of success. And this is a gamble, and I'm okay with people taking gambles. Obviously, take a gamble if you want there, NJ. Just make sure that's not with all your capital, right? They're gambles for a reason. You have a higher probability of losing than actually winning on that trade. So I try to go with the higher probability ones where I feel confident I'm going to have a successful trade. This one, to me, looks like just gambling. Let's see what else. How much time I got left? Holy cow! Time flies, and you answer a bunch of questions. Mr. Margaret, need your brother in the Deadwood. I agree on Russell. Let's see. Sava, do you have concerns with Bitcoin not having any human operational network behind it? Nope. With financial operations, once someone dies, the beneficiaries can call someone to receive all those. Oh, yeah, okay. So, Tom, you sent me a really interesting email, and I'm actually going to do a show on this. I need to prepare and do a couple steps, a couple things. But I'm not concerned about it. So in another way, what Saba is saying is, if somebody dies suddenly, and this was Tom Barr's point as well, if Merlin dies, right? Let's say a plane crashes in my house. I'm by the airport. Plane crashes into my house and I die. Who knows about my seed phrase, my private keys, where all the bodies lie, so to speak? Where is all his crypto at? Because when you have a bank, the bank's going to be sending you statements. You can, okay, they have a bank account there. It doesn't happen with crypto. That's why I think it's important that you document these things and have a document that shows here is where my accounts are. I have a document that shows kind of where my accounts are located and part of the encryption process to receive them. The other part is coded, so the beneficiaries on my account know the extra piece of the code. So even if you were to get into where I keep my information, you wouldn't be able to access my accounts. You're gonna be missing a part of it, right? It's like the cipher, the key that makes it all work. So I've done that to prepare should something happen to me. You never know when your ticket's gonna get punched and all of a sudden, the day's over. So the other thing that you could do, and I haven't done this yet, but I'm thinking about it, is setting up a trust, which will require legal action, meaning I got to get a lawyer involved. And the lawyer would have access to all that information. Now, that makes me a bit nervous because if the lawyer has my private keys, then the lawyer can take whatever they want. So I really have to trust that lawyer. But I want to set everything up in a trust to make it much easier to know where everything is at and all that. But it is a real concern. I would argue that it's a concern for people even outside of crypto. When someone passes away, how do you know where everything is at? If Uncle Tom buried a jar of gold coins in the backyard, how do you know? You're going to find those things? Where is it? Where's the treasure map? So it is a concern, but I'll do a show with you guys talking about, BTC has a staking company for crypto. Well, that chart looks like garbage. It doesn't look like it's following crypto at all, Big M. So I'll do a show, if I can this week, and talking about, what are some steps that we can do to custody our crypto and kind of what are some best practices. I have something I've been working on, which I haven't finished, that I'll share with you guys as well to help with that. Let's see. Not the crypto trend. I'm not against it. I just am convinced that the valid currency to exchange for services I'd compare it to Pages paying is no more than being. Yeah, but see the difference there, Dave, is going and trying to buy something with a Van Gogh. I can't go to my local stores and say, hey, I know I got $100 worth of groceries. I got a $50 million painting here. Can you hook me up? I'll give you a little corner of the painting, right? One thing that's nice about Bitcoin is it's totally divisible. So I can go out to 8 decimal places and use a small fraction of my Bitcoin, and now all of a sudden I have much greater utilization potential, right? The key is we have to have businesses accept it, and they're not doing it right now because of what's going on in Washington. They cannot decide whether it's a currency or commodity, and they're worried that they're going to get in trouble for interacting with Bitcoin for big businesses. What will happen is once we get that clarity, then businesses can say, okay, well, we know it's this or that. We can do our business accordingly. The other concern I think some of you are going to express is, well, Bitcoin's so volatile that it's dangerous for a company to hold Bitcoin on its books. Well, there are services which will convert Bitcoin into a native currency of your choice. So if I run a business and I'm deathly afraid of Bitcoin or any crypto, but Big Eb says, hey, I want to pay you with Ethereum. Okay, you pay me with Ethereum, but the application that we use converts that automatically into whatever I want it to be, dollars. I want it in yen. Great, it'll convert to yen. So that's a piece to get over the business's angst and maybe apprehension about adopting Bitcoin. Let's see, what did Big Ed say? With adoption, I wonder if you won't be able to self-custody your own Bitcoin on the future to save investors. Maybe, right? If you look at the Bitcoin that I have on cold storage, if I were to pass this on to somebody, do I have to pay estate tax? Right? That's where we're going to have issues, I think, going forward. Let's see. Only my wife knows my keys, and I was not sure I even wanted to go to Big Ab. Trust no one. It was like the old one I think you told you. Mike McMahon told me this one years ago. You can trust yourself and you can trust your mother. And do you really trust your mother? I love that one. Yeah, is that what you're asking? Saba, you can self-custody. If they make that illegal. I don't think they can make it illegal. How do you make it illegal? I guess you could pass a law, but what I have on my device right now, if they make it illegal, I guess I'm going to break the law. I'm keeping this. Do they know where my crypto is? They'd have to track a lot of transactions. I've made thousands of transactions over the years, so good luck finding all that. But theoretically, I guess they could make it illegal, but I really doubt that they could. I really doubt they would. All right, let me go to your economic calendar for tomorrow. I almost feel like it's Friday, but it's not. Tomorrow's Thursday. So what do we got cooking? Let me bring up that economic calendar so I can wrap up here and hopefully take the dog for a walk before the rain starts coming down. It's going to be atmospheric river, folks. I love that term. The atmospheric river. All right, I might be able to finish this by the time the ad starts. That's 39 seconds away. So for tomorrow, you have the Philly Fed Manufacturing Index import. It's a huge day, by the way. Natural gas storage, you have FOMC member Barr will be speaking, FOMC member Waller and Williams will be speaking. You've got capacity utilization rate, industrial production. It's a big day for the market, for the U.S. anyway, tomorrow. Unemployment claims are probably one of the bigger ones, and then tomorrow night you have retail sales coming out for the British pound. On the earnings calendar front, let's go check out your earnings. I already brought it up here. So we've got Walmart tomorrow. You got Alibaba. That's before market open. I'll be surprised if they report. They may not report. Sometimes they delay it. But now I'll wait because you're going to get a commercial break right now. I'll keep talking. But the ads are counting down over here. So tomorrow you've got Alibaba, Applied Materials, NetEase, Copart, Ross Stores, Johnson Controls. Quite a few large companies out there. If we drop down here as well, you can see there are some other names you might recognize like Warner Music Group, Lenovo. But really the big stuff is Walmart, Alibaba, Applied Materials, and for me, Ross Stores. Ross Stores is a very interesting one. I love Ross Stores. I don't know why, but I'm definitely a fan of Ross. All right, so that'll do it for me for today. Yep, I know you got the ad. It gives me a little countdown timer. It says they're going to get an ad in 30 seconds. It's kind of cool. Let me see here. Tom says they made all Americans turn in their gold once. The IRS already asked you about crypto. Yeah, true. I know that when they closed the gold window and basically said turn in your gold or else. I don't know if it'll be the same with Bitcoin. I don't know. Granted, they could dig and they could go through Coinbase and try to track where everything's at, but because Coinbase is where I initially made a lot of my purchases, but those have moved all over the place. I could easily say, I lost my private key. Since I plan on holding this for years, well, actually, till 2025, I don't know. I'll worry about that when it comes. I don't believe that they will outlaw self-custody, but they could. You never know. And atmospheric river sounds like you can surf in it, but really means we will likely have sewer issues. True. It will probably not going to be any big deal. Honestly, for those of us in Southern California, we love atmospheric rivers. Bring them on. We need rain. I want rain here. Michael, Biden may allocate 1,000 IRS agents to track your trades. Hey, it could happen. It could happen. All right, everybody, that's going to do it for me. As Lisa says, hit that like button. If there's something you want me to talk about for the rest of the show, tell me. Not this show, but the rest of the week. We've got a show tomorrow, a show on Friday, and I'm on vacation. So here's the tough part, guys. I start vacation technically tomorrow. I'm still going to do a show Thursday and Friday, and I'm on vacation all next week. I'm probably still going to do shows for you guys. I say probably. If I leave, I'll let you guys know, but I'm probably the week after, I'm not doing a show because I'm going to be in Hawaii. And then the week after, December 4th through December 9th, I'm teaching a class. So you guys are getting at least 2 weeks without TraderMerlin shows. My apologies, but they got me in a class, so I'm going to have to do that. Anyway, we'll talk more about that on tomorrow's show or maybe even next week. So if you got a topic you want covered, let me know. Send it in at TraderMerlin@gmail.com or put it down below any of the YouTube videos. That said, everybody have a fantastic remainder of your day. I will see you tomorrow. Take care.